In this exercise, we have a lot of information and a lot of work to do. So let's get started. We're looking at exercise 2-19, in which we are asked to record transactions in the journal, post to the T account, and then prepare a trial balance. So we've been given all the information about the 7 transactions. If you look further, they tell you under requirements which account names you should use. And they've told us that we have 0 balances since this is a brand new business. So that kind of makes it a little easy. And we need to calculate ending balances, obviously, in order to prepare our trial balance. So let's get started with what we have here. Oops, I positioned this correctly. Okay. So in this exercise, unlike the previous exercise, what we will do is as we do record each transaction, we will post it into the T account. We will not wait until the end. Makes things go a little faster. This is called real-time posting of journal entries. If you wait and do it at the end of the month, end of the period, whatever it may be, week, month, it could be even at the end of the day if you have numerous transactions, that's called batch posting. So I issued $10,000 shares of common stock in exchange for $42,000 in cash. So it means that I gave common stock to the shareholders and they gave me 42,000. So we have cash debit and common stock credit, and the amount is 42,000. So the company received 42,000 and the company gave ownership. They gave common share certificates to all the owners. So I will post this cash debit 42,000, common stock credit 42,000. So I already have my T account set up over here. And the reason again I could do it is because they had given me the names of all the accounts to use. Next is I purchased land for 24,000. A note payable is signed for the full amount. So what did the company get? The company got land. We purchased land. Did we pay cash? No, we signed a note. We promised we will pay it in full later on. We paid nothing right now. I have promised to pay. I have a note payable, so I have a liability in my books, and that's notes payable. So I have land debit, notes payable credit, 24,000. So land on the debit side, I'll put 24,000. Notes payable on the credit side, I'll put 24,000. Next, on the 9th, I purchased storage container equipment for $9,000 cash. So on the 5th, I made a purchase. On the 9th, I made a purchase. The difference of the two purchases, other than that, I got 2 different assets, is on the 5th, I did not pay any cash. On the 9th, I'm paying cash. So what did I get? I got an equipment, storage equipment, and I paid cash. So cash is going to be credited. So storage equipment will be debited and cash will be credited, $9,000. On the 12th, I hired 3 employees for $3,000 per month. I hired them. Did I pay them today? The answer is no. They still have to work for me before they can earn the $3,000. I have not received the benefit of their work as yet. So on this day, there is no entry. Now we are going to write the words no entry over here, but a company in their journal will not put the words no entry. They don't do anything on this day. Well, the HR does the paperwork, but accounting is not going to do anything. On the 18th, we received $13,000 in rental fees for the current month. So we rented out those storage equipment, the containers, and we earned 13,000 cash. Cash is going to be debited because I got cash. My cash balance has gone up by 13,000. The reason my customers paid me the money is because I provided them the service. So for me, it is service revenue. I have earned this. $13,000 debit, and where is my service revenue? Rent revenue or service revenue will be credited. Just to make sure, what's the account name they've asked us to use? Service revenue. Okay, so I will change this to service revenue so I can be consistent with what the exercise asked me to do. Service revenue, oops, Let me spell that correctly. Service revenue, 13,000 credit. I did that correctly over here, but I had the wrong name, so I was just trying to be consistent. On the 23rd, I purchased office supplies for $3,000, but it's on account. I have office supplies, so office supplies will be debited. My asset increased by 3,000. However, I didn't pay the money right now. I will pay in the future. So it's a payable, which is a liability. It's called accounts payable. We don't use the word notes payable. Notes payable is typically a longer term a liability, and I pay interest on it. Accounts payable are payments made to vendors, payables to vendors. Typically, the vendors will give me 30 days to make the payment, and they don't charge me any interest in those 30 days. So I have office supplies debit, 3,000. Accounts payable credit, 3,000. And finally, I pay my employees $9,000 for the first 3 months of salaries. If you recall over here, I had said it was no entry. Now they've actually done the work for me. So now I'm going to pay them. It's the end of the month. I'm paying them, so cash has to be credited. I'm paying my employees a total of $9,000. I hired 3 employees for $3,000 each, so $9,000. I got the benefit of their work, so it's an expense for me. And the name of the expense is salaries expense. So salaries expense debit, 9,000. Cash credit, 9,000. Now I'm done with recording the journal entries and posting into T accounts. Now, before I can do the next step, which is preparing the trial balance, I'll explain what that is, it is in a minute. I first need to find the balance in all these accounts. So again, what I'm going to do over here is the ones that have only one number, either on the debit side or the credit side, I draw a double underline under it. I'll also change the color so we know that's the balance. So we have, oops, let me change the color. I have common stock credit, 24,000, land debit. So pretty much all these accounts have only one number in it, making my life a little easier for now. So these are the balances in the accounts. Okay, so cash is the only one that has more than one number. We add up the debit side. We add up the credit side, more debit than credit. Take the difference and put that number under the larger side. So the difference between the two, debits are more than credits. So we have a debit of 37,000. So now I'm done with the third step, which is posting into all the T accounts and finding the balance. Now, the first step is analyzing the transaction. What's the effect on the accounting equation? Which accounts are affected? Was it increase, decrease, etc.? Second step is recording in the journal. Third step is posting it to the T account. We're done with that. The next step, the fourth step, is preparing a trial balance. A trial balance is nothing but a listing of all the accounts on a particular date, and I list only accounts if they do not have a zero balance. So we say if it has a non-zero balance. The reason you don't want to include all these accounts with zero balances, I could have a whole bunch of accounts. A chart of accounts has all the account names, but they don't have any balances. But a trial balance is used to prepare financial statements, so it's important. Always first line, I will have name of the business. Second line, I'll identify that it's a trial balance. Third line, I will say as of what date. This is end of the month. So January 31st, 2024. I will list all my accounts. All the account names will be listed here. And I'll list whether it has a debit or a credit balance. So you can just start with the first one. There are many different ways in which these names can be listed. I'm just going to go ahead and list all of them over here. So I have cash, a common stock, land, notes payable, just in the order in which I had them over here. I'm just putting them down over here. Now, most firms, what they will do is for accounts, they have account numbers, and then to reorder them becomes easier. So all assets, the numbers are in the 100s, liabilities are 200s, equity is 300, revenue is 400, expenses 500. So it kind of makes it a little easier for the step that we have after this, after the trial balance, but we're just to the trial balance. So I listed down all the accounts that had a non-zero balance, which is all of these over here. Now you add up the two sides, the debit side and the credit side. These two sides must be equal. Because remember, in our journal entry, what have we said? Accounting rules. We have a date, we have at least two accounts affected, total debits must be equal to total credits. If we did that correctly, and the next step of posting, these numbers have to be equal. If they are not, go back and see where you made a mistake. Most likely when you took a number from the journal to the ledger, or from the ledger to the trial balance, you just made a mistake carrying the numbers over. That's when Excel is very useful. If I put the number in one place, after that I just do cell referencing, I don't type the numbers in again. Makes things a lot easier. Accounting software will do all of that for you. You'll be doing only this first step, but it's very important you know what you're doing over here and how it flows through. So once again, step 1 is analyzing the transaction. Step 2 is recording in the journal. Step 3 is posting into the ledger. And step 4, at the end of a period, preparing the trial balance. So we are done with the 4 steps of the accounting cycle. With this, we'll get ready to start the next exercise.